Larry Wagner here, just before 2 o'clock in Honolulu, 7 o'clock in New York. It is Tuesday, 9th day of February, 2021, and this is the daily report for gold and silver. We had a moderate upside move in gold today and a downtick in silver. We did send out a special trade alert yesterday recommending the initiation of long positions in both of those precious metals. We will talk about our target for upside exit on both gold and silver trades and revisit our long SLVs that we have put on in 2 legs. But first, to the price board and our technical studies. Although gold is well off the intraday high that was achieved overseas last night, $1,849, it did close higher to the tune of $4.60 and is currently fixed at $1,838.80. Yesterday, we sent out a trade alert recommending that you enter gold futures basis the most active April from the long side. Traders taking that call entered at $1,832.20. For those subscribers who are trading spot or the Forex market, you entered your gold position at $1830.75. Market is at $1838.10. Traders, while it's true that living in Hawaii, you could say in terms of time zones, we are in the middle of nowhere and the last place that New Year's Eve actually occurs on this earth. However, a good point is that it allows me to start with the close of New York and then look at charts that will indicate whether or not we have follow through in Australia. That is exactly what we're looking at now, with gold trading at $1839. If you recall from yesterday's and Friday's show, we identified a couple of key reversal pivot points in terms of a candlestick patterns, both in gold futures as well as in spot gold. In terms of gold futures, and that's the chart that we are looking at, we identified a simple 2-day pattern simply known as a bullish harami. Harami means pregnant in Japanese, and it refers to having a small-bodied candle fall within the range of the body of the prior large red candle, and that's exactly what we saw. We entered our trade at $1832.20, and as I said, we're currently trading approximately $7 above that at $1839.50. We've got follow-through buying that's coming in. You can see where it's opened near the close of New York and has actually moved above that closing price to the tune of $2 right now. And we do not see any major resistance really till this cluster occurs. And the cluster that I am referring to is where we have a 38% Fibonacci retracement and all of the 3 moving averages, which begin 1857 is our 50-day, and then our 100-day moving average is sitting at 1874.20. So that is where I would look for a little resistance come in. As you can see, I have pointed our first level of resistance at 1874.20. So my first target price is exactly that, the 100-day moving average. If it is able to continue to track higher and break through that, we really don't see any real resistance till about 1925, and that's minor resistance, this particular top here. But we certainly would have some potential resistance at the 23.6 Fibonacci retracement level, which occurs at 1942.55, and then this double top that you can see right here and here that come in approximately 1960 to 1965. Traders, maintain your current long position in spot gold and gold futures basis the most active April contract. We also recommended the initiation of long positions in silver futures. This basis the most active March contract. It is currently fixed at $27.33 per ounce, and that is a decline on the day of almost 25 cents. However, our entry price for this particular contract was $27.36, so right around current pricing. For our subscribers that are trading Forex or spot silver, that is currently at $27.25. We entered our long trade at $27.26. We remain long SLV, that's the iShares Silver Trust, currently at $25.28. We entered our first leg at 22.95 and our second leg at 24.66. As far as our technical indicators and studies go in terms of silver, it was gold that initiated the trigger. And I included silver because of the golden cross that occurred between the 50 in green and the 100-day in blue moving averages. That crossed about the end of January this year. And I am looking for silver to track as high as approximately $30. We tested that as recently as a week ago, and I think that we could easily see it move back to these levels again. My target for silver is $30 per ounce. Maintain your current stop in silver futures as well as Forex or spot silver. And traders, as you know, we have been maintaining a long position in SLV, the iShares Silver Trust. This is a weekly candlestick chart that we are looking at. We can see the dramatic sell-off that occurred last week. However, the market is trading at 25.28, and if you recall, we entered in two legs. The first leg was 22.95, so we have approximately $2 and change in terms of profit on the first leg. The second leg we entered at 24.60. We've got about 75 cents per share of profit in that. We are looking to move our stops up. I want to see where the low goes this week, but my thought process right now is to move it based on the weekly low, either tomorrow or on Thursday. And traders, lastly, a look at Bitcoin. We did an interview with Kitco's David Lin today. That will come out tomorrow morning pre-market. But to just give you an idea of what we spoke about, obviously Bitcoin was the topic over the last two trading days. We've seen it move from an opening price on Monday of approximately $39,000, $38,997, track about $10,000 higher at $48,805. And as you can see, this little red candle that's coming in, that is in reference to after hours activity, and it is red. Currently, we have Bitcoin at $47,170, down $595 since the futures contract closed in New York this afternoon. Now, could very well see a top, whether it's a short-term top or the end of a pretty fantastic run, considering this market had a bottom of approximately 29,000 back in the middle of January. And the reason I say that is strictly on a technical basis. If you notice, we have a Fibonacci extension. This extension is from March lows to the highs that came in January. And then we start the extension from this price point here at around 28,000. And we also did a Fibonacci extension using those same calibrated entry and exit points. And you can see that the 0.618 extension, and we're looking at this top here as a third wave, so that this would have been the conclusion of our fourth wave here. We are now in a upside fifth wave. If in fact we hit a top, that would be an extension of a third wave of 0.618, and that is a valid price point to look for a Fibonacci extension to go to on a fifth wave when you're using the third wave as a comparison to. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.